Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 20th, 2021. Wanted to get an update out there. I think it's a good time to take a look at some of the things to watch. We'll start out with the indexes and then a couple of the other recently highlighted trade ideas. All right, so in the indexes, the most significant development so far today is this break here. In the last few videos, I've highlighted a couple levels on both ES and NQ. I'll get to the ETFs in a second. I know a lot of you guys don't trade futures, but I do recommend you track them. Again, I like to use the futures, not just trading vehicles, but you also see levels that develop with the overnight session. These are the Globex futures. They trade virtually around the clock. They only shut down for a brief period each day. So you have a lot more candlesticks, and that gives you more reactions and levels to look at. Plus a lot of professionals are trading these as well. So okay, so we hit that level. We danced on it for a little bit, for about maybe half an hour earlier today, not showing well in the 60-minute chart because you'd have to zoom down to 1 minute, but we've taken it out. So that is a sell signal right there on NQ. We've taken out that 13,772 level. Still maintain, I think that'll be the beginning of a correction. That was a level we needed to take out, and it has been. So there's your next target, additional second target zone right there. I think you can make the levels out in the video. 13,540, about 13,285 to 13,342, and that's pretty good. It was a former resistance zone. Remember, that's where we broke out. That gave us a near-term buy signal a couple weeks ago right here on that impulsive breakout. And resistance, once broken, then becomes support. So there's your targets right there. There's your sell signal. However, we do have ES still coming up, but not yet taken out the comparable level, about 4,100. I have it here listed as 4,104. We'll just round that down for benefit of the doubt, 4,100. Do I think it goes? Yeah, I think it goes because we've been building these divergences for quite a while, and we're starting to finally move down impulsively. The volatility indexes are spiking. We have one of the biggest moves up in that crude volatility index in a while, but there it is. So the sell signal in NQ is in itself, it's clean, but it's still questionable unless we have the S&P 500 breakdown, and I think that'll do the trick here. So maybe we get another consolidation here in NQ as ES hits this level and consolidates a little bit, but so far so good. So not a check mark yet, but again, if we can break a solid break above 4,100, especially a 60-minute close, should open the door for a drop down to about 40.55. And the second target would be 39.75, and that'd be well, of course, that's my minimum target. That's the first target, but let's just say this is my preferred swing target right now, where, depending on how things look, maybe that'll be a nice level to reverse any shorts if we get there and go long, or maybe not. We'll see. Again, the charts are dynamic, and so is my analysis, so it's hard to say at this point in time how things are going to look if and when we even get there. So first things first, and that's it. And those are the levels to watch. We don't have the sell signal yet on ES, but we do have some pretty impulsive selling over the last couple days, and that's usually indicative of it comes after an extended uptrend with low volatility and in the beginning of a downtrend or a correction. And the small caps continue to underperform, unlike the S&P 500 coming off recently fresh all-time highs. The Russell 2000 small cap peaked all the way back here. That was back in mid-March right there. There's the dates down on the bottom. That's what you want to go by there. Divergent low and then correction. Here's a downtrend line I've added, by the way, that now I think is valid. You have the highs right there and several reaction highs. That's one to watch on any bounce back. And this is a pretty decent support. It was my second target zone back here, and there were a few reactions around there. But when we look at the IWM daily chart, I haven't even done so yet, but we're probably at my trend line now. That long-standing target. There it is. Yep, there it is. Trend line hit, and I'm talking about the trend line off the March lows. So as I said, after we came close there, I suspected we might get one last jog down and hit it. And again, if we take it out, now if the S&P 500 breaks down, the NASDAQ 100 breaks down, you probably get some, sell programs kick in, and that could drag the small caps down and take us down here to 205. So if you're short IWM or looking to short it or have been short, here's your reaction highs. You should remain below, and I also gave you that downtrend line. So I think it's objective to have a stop somewhat below the downtrend line right there. If you're swinging down here to 205, that's certainly a potential swing target there. And remember, it's not just what's in the 60-minute charts. You have the daily and even weekly charts with these long-standing divergences, which give us a potential for a much bigger drop. I know things have been rosy lately. Price action has been extremely resilient for many months now, but that's how it is usually. When you get these divergences, they can build. They don't always play out, but more often than not they do, so you need to respect them. And again, that helps to identify when you might be looking for a quick pullback trade for the next long entry, next leg to new highs, or looking for a major trend change there. So certainly the potential in the charts. Let's leave it at that. QQQ, busy chart here, but the same story. The divergence has been building. We started moving down, had a decent correction there, about 12% in the Qs, pushed up back here. We rallied. That was a target, one of my targets, 297, which was hit. I had additional potential targets, and they still may be hit. When we hit that, bounced. I said if we took out the top of this range, which we did, that would probably give us a marginal new high in QQQ, which we now have. Marginal meaning a slight high over the previous high there, and the divergence has extended. And you can see here the PPO is starting to roll over. It hasn't made a crossover yet, but you want to look for that. There's the last bearish crossover right there, and the PPO was there. And then we had a bullish crossover here. We successfully tested the lines. The bullish crossover remained intact. So those were your inflection points. The high right there came right after that bearish PPO crossover, and the low came shortly after the bullish PPO crossover. And so that's one thing to look for, especially on a swing trading time frame. When you're looking out not just minutes right now, I'm looking minute by minute on these charts, what might happen today, but when you're looking out for the next few days to few weeks plus, that's where these PPO crossovers sometimes have some predictive or useful value. There was one right there before that drop. All right, so that's what the Qs look like. Targets would be the same resistance levels on the way up, would act as support on the way down. There's some of my lines there. SPY would be, SPY, like I said, coming off a recent all-time high. That's been the MO. Remember, these divergences have been building for quite a while. Maybe they continue to build. Maybe they eventually get taken out. Maybe this is just another pullback within a large uptrend. But you do have, this was our primary trend line that was already broken. I gave this BOD, or benefit of the doubt trend line. Again, that has these recent reactions there. So that would be also a near-term target. And to give you one more level, if you're a SPY trader, right there, I think about 397. That's horizontal price support. You have some reactions right there, and it's just below that trend line. So again, it all comes back to the ES chart. Need to see 4100 go, and I think if that does, we get more selling. Otherwise, maybe that's it for today. I'm leaning towards this. I'd rather wait in position for that to add some short exposure, and then cover here and try to go long for the next bounce. Too many divergences, too overbought for my taste. So that's why I'm favoring these short setups at this point in time. And there's crude. I got this one out to you as quick as I could today, and I also wanted to include a chart of SCO. So right when the breakdown occurred, we had a bearish rising wedge pattern right there, confirmed with negative divergence. That's what I like about that. That's what you want to see ideally in a bearish rising wedge pattern. And then you had dual support levels. You had the uptrend line, the bottom of the wedge, and that 63.53 level was a good level right there. We had a little false breakout above it, and then once that breakout failed right here, we dropped back below the wedge in 63.53. It was good for a quick 3+% drop, and we hit my first target with the typical reaction so far. I don't know if you can see it here. I'll zoom in a little tighter, meaning a brief momentum fueled overshoot, and that's to be expected. You had a vertical drop down to 61.87. You're not going to hit it and bounce, is what I call momentum fueled overshoot. You have tremendous momentum heading down. You're going to snap through that level usually and then come back, and that's what we did. So it was good to cover and reverse for a quick bounce trade, which was what I did, but I just wanted to play a bounce, a reaction off there, and then I went back short recently right before I started the video. I think we'll break it with the NASDAQ breaking down. And if it doesn't, look, if ES holds support, here, we'll probably bounce to there. I gave you a bounce target in the last chart I posted on the homepage right before I did this video, right about here. That is a potential bounce target right there. And so I could easily see us going up there just with the reaction off that first level. But if ES holds support and puts in a decent rally from here, in NQ, now keep in mind too, NQ could snap back above that support level that was just taken out that I covered in the beginning of the video, and that would be a whipsaw signal, and that's going to be near-term bullish as well. So this would be a potential bounce target right there, back to that 63.53 resistance level. So that's where you could layer in and add a second round of shorts on the crude, and that's probably what I'll end up doing if we get there. But again, charts are dynamic, so I'll give you updates. But either way, so far a quick trade, and then potential to move all the way down here. I probably should give you one other target because that's a pretty aggressive target down to about 57.50. Right here, I'm going to add one more target where we'd probably get a reaction, and that's about $60 right there. So crude's pretty round numbers there. We'll call it 60 and then 57.50. Wheat, gotta love these commodities. They've been very tradable recently, and overall they're in bull markets. So there's that 678, 330 target hit almost to the button today with a nice reversal. Gave active traders a chance to exit there. There's potential divergence forming. We haven't yet turned the PPO down. We haven't made a bearish crossover yet, but it's potential. And again, I made it clear, we are in a bull market in commodities, and so you need to define your trading style. If you took the last long entry here on wheat, which was a breakout above the downtrend line, and then we had some price resistance right above there, so breakout 1, breakout 2, good for, I don't know what that is, 8% or so right there maybe. That an active trader could have booked profits and recycle back in. Where to? Maybe on this trend line right here, if you're going to pull back there, or that 650 target, which was already hit. That was our first target, and that's why I list multiple targets. Each target, you're likely to get a reaction on the initial tag, like right there on that 650 target. Then you pull back to the next support level, recycle back in long, and again, that's the realm of the active trader. And a swing trader, a trend trader, I should say, can just, if you got back into wheat here after selling out recently, or whatever, maybe you just entered it, you haven't been in commodities, and you're starting to get aboard that trade now, then you should at the very least have your stops raised to entry to assure a break even on the trade at this point in time. And then as time goes up, I like to periodically ratchet my stops up strategically on long-term positions a little bit below support levels to allow for a little bit of whipsaws on a pullback. Okay, gosh, I'm having a problem with this pause button. Oh, so apparently I've just covered wheat, but I don't think it was recording, so I'm going to go over that quickly. All right, wheat, my second and near-term target. I listed two targets on the last wheat trade setup right here. That 678, 330 was hit today. We were coming up on it. I got that post out to you in advance, so active traders could book profits and sidestep the give back so far. You can see we pulled back. And the story on this one was the last objective long entry was on a breakout of the downtrend line, and then we had price resistance just above that. So there was breakout 1, breakout 2, went up, hit my first target, which was 650, 153, almost to the button, pulled back, and this is trading 101. That's why I list multiple targets. An active trader can often game those pullbacks. So if you sold out there, or even reverse to a short, you buy back in on a pullback to the next support level, which was, the former resistance, 631. Keep in mind this chart rolled. These futures will roll from time to time. The first contract I had was the previous one. These are the July contracts. So these numbers may change and often will change slightly, but I'll realign them with the same levels, the reactions. That's how I set the trend lines. And anyways, that's it. So there was, first target hit, pullback, second target hit, pullback, and an objective long if you want to recycle back in. Maybe a pullback to the trend line and or that 650 level. And longer term investors, as I said, wheat is in a bull market as most commodities are, and so you may just, if you entered there, it'd be prudent to raise your stops at the very least to break even at this point. I like to periodically raise stops and ratchet them up just below support levels that should contain a pullback, and as time goes on, you just keep raising your stops like that and let it run if you are a trend trader or a long-term trader. And again, active traders can game the micro squiggles, I call them, pullbacks off resistance, pullbacks by go long at support, and or break out above resistance. That's how you want to trade long side setups. Really nothing significant to update in natural gas. It hit that 741 target yesterday. We had some divergences and still do. So, again, sometimes those divergences are burned through, especially in a bull trend. So a solid break above that level should open the door to move up to next target at 2,929. Although I suspect we'll probably get a pullback here, and if so, then there's your next objective long entry on a pullback to the uptrend line and that previous 2,675 target on NG natural gas. And remember, I've been posting a lot of the micro contracts as well, or the minis, MINY they call them, the smaller contracts. And on natural gas, it is QG. And remember, these mini or micro contracts trade the same price levels as the bigger contracts. They just employ a smaller leverage factor. And I'll also try to make mention, like as I often do, if you don't trade futures at all, you don't have access or the desire to trade futures, then I'll try to include the ETNs that are relevant, and that's UNG for natural gas. So still looking good longer term, but near term might get a little pullback here, I suspect. And gold, I remain longer term bullish on gold. It's not much to update on the daily chart, but I do want to just do a brief update on it here. Put in this divergent low. We had two equal tags down to the bottom of my buy zone. That's that long-standing buy zone I've had back since really, I think, since we topped back here and said it was time to get out of long-term positions. Correction was coming up, and hit it there, rallied off it, hit it there, a little bounce, fell to the bottom, and that's it. So if you like it at the top of the buy zone, you got to love it at the bottom of the buy zone, which is even better support. And so far, a decent rally. Now the update that I wanted to mention is we're back up to that downtrend line. So there's our downtrend line. I've taken away everything here. Let me do that for you. Take away all those lines. I know that chart looked busy. Here's your downtrend line in gold. I just have this one little pop here excluded. That was 4 days of trading, and I did that because there's enough reactions, enough distinct reactions, I think, to make that trend line valid. And so that's it. So if gold can power on through there, that should be bullish. And quite likely, my primary thesis right now is that, or outlook is that this is, the end of the correction in a bull market in gold, and we'll eventually head on to new highs. We'll see. Only time will tell. And it's like anything, you don't put all your money in any one trade. So it's not like I'm betting the farm on gold. It's just one of many positions and something that I think is poised to probably outperform here. Again, I've talked fundamentally and technically. That's all technicals. Yeah, everything based on these charts. That's a weekly chart. Fundamentals, one of many reasons, is almost all commodities are running. Industrial commodities, copper, aluminum, lumber, things like that. And I think gold has been labeled, left for dead by a lot of people thinking, oh, well, now Bitcoin's the new gold. And to me, yeah, after thousands of years of gold being the flight to safety and store of, value and currency and inflation hedge, Bitcoin is just a little fleck of time. 5 years from now, 10 years from now, we can maybe say gold is dead, but not at this point. And as I said, we have a runaway inflation environment right now, and gold, I think a lot of people tend to forget, has big time industrial applications, and I think that's not being priced into it right now, and therefore that helps me align a technical bullish case with a fundamental bullish case. And then again, technicals rule, so I want to see that trend line taken out, and that should help spark the next leg up in gold. All right, gold futures GC, this is what it looks like here. You had this divergent low right there. That's that same bottom of my long-term buy zone on GLD. We had positive divergence on the 60-minute chart here, and we've been moving up. Gold took out the downtrend line right here. That was an additional buy signal there, and recently took out some nice resistance levels right about here and here. So it's working its way up. It is in a near-term uptrend right now, and if you're concerned about stops or looking for objective levels to buy, pullbacks to support such as the 1760-ish level right here and or the uptrend line, those are objective long entries. And there are also objective levels to keep a relatively tight stop if you're an active trader. Again, long-term investor, it's simple, at least in my opinion. You buy in the buy zone, and once we start to move away, you should have, at this point in time, we've had 2 tags at the bottom. You might leave some more dry powder to buy another one. And of course, remember that gold is just one proxy. You get more bang for your buck when trading the gold mining stocks, and that's what I highlighted here as well. When gold hit the bottom of the support zone, GDX did as well, and GDX is up quite a bit. That support zone's around 3130, and GDX has already rallied about 15% off that second tag there. So nice trade, and still looks good by all counts on this chart. I don't see any reason for a long-term investor to take profits yet. I think there's another leg coming in GDX. And one more I wanted to update. I did, after the last video, I covered Bitcoin the other day, highlighting that it broke down my long-term uptrend line right there, giving a pretty powerful sell signal. And after that video, I went ahead and added some levels, meaning targets, support levels. 52,969, that one just got hit. So if and when that level goes, which I suspect it will, next target 44,944, or no, I'm sorry, 44,944, I said that correct. And then 39,469, and potentially all the way back down. That would be an ugly correction, 29,748. Let's just say at this point in time, this is the most likely swing target right here, 44,944, or we'll call it 44,950 if you want to round up. That's a pretty decent support level, and it would represent, from where we're at, and we've already dropped quite a bit. That would be another about right about 20% drop from where we're at right now in Bitcoin. And again, this is BRR Bitcoin futures. That is using 2-hour candlesticks, 6-month chart, but it's the same uptrend line on my daily chart there as well. And then that's going to spill over into the crypto-related trades, like this one I highlighted in my short trade ideas the other day. MARA continues to fall. It was based on this divergent high and the trend line break, the rejection and the false breakout above 50.89, highlighted about right here, right after that last rejection. It's already dropped about 30%, and we still have room to go before even my first and minimum target. These are all their potential targets. So when Bitcoin tops, those high-flying stocks like Riot, they're going to fall with it. Riot still has another, from where it's at now, as much as it's fallen in the last few days, about another 30% as well to my $27 target. So those are some other potential trade ideas for you. That's about it. If I see anything else that stands out, I'll get it out to you. Remember, I did put up there, long and short trade ideas the other day. There's a lot of them out there. All these, like I covered, these were all the short trade ideas. Mara, SIG. SIG's down another 6% today. That was nailed the high on that one so far. Ally, ALLY, starting to roll over, down 3% today. What other ones do I have here? I'm not hitting them all. DXLG, that one was not a hard sell. You really didn't have a sell signal. We need to break that trend line, but it's moving down. The biotechs I mentioned, semiconductors, they're continuing to move down. Winnebago WGO, breaking the trend line, but needs it once it takes that 73.60. I think it'll fall quite a bit more if and when that happens. BC, very close to the trend line, about to trigger a sell signal, and UAN. So that's just, again, some of the ones mentioned in the recent video. So the likelihood of these playing out will increase tenfold if we get the confirmed sell signals I'm talking about on both NQ and ES. So ES is still holding that support as I wrap this video up. So that's the level to watch right now. And that's it. I'm going to get the video out to you guys. If I see anything else, I'll follow up with some static charts later today. This has been Randy Finney with Right Side of the Chart. Have a great day.